Let me give you a statistic that completely changed how I trade. Around 70% of a profitable trader's time is spent not trading, not clicking, not chasing, not forcing setups, just waiting. While most retail traders feel the need to constantly participate, consistently profitable traders understand something different. Activity is not progress. In trading, excessive activity is usually the enemy. Patience isn't just a personality trait in this business, it's risk management. It's capital preservation. It's survival. The human brain wasn't built for financial markets. We evolved to react quickly. Fast decisions meant safety. Immediate action meant survival. But in trading, that same wiring becomes destructive. The impulse to act, to catch every move, to be involved in every candle quietly drains accounts over time. But statistically, it's expensive. Professional traders operate differently. They wait for structure. They wait for alignment. They wait for asymmetry, where risk is controlled and reward is meaningful. They understand that most price movement is noise, and only a small fraction is real opportunity. Impatience compounds. Every impulsive entry, every deviation from your plan, every "this looks good enough." Over time, those small compromises stack into large drawdowns. Imagine one trader taking 15 to 20 average setups a week, each with mediocre edge. Even risking 1% per trade, that exposure adds up fast. Now compare that to someone taking 3 or 4 carefully selected trades with strong confluence and solid risk to reward. Less exposure, less friction, higher quality decisions. Add spreads, commissions, slippage, and mental fatigue, and overtrading becomes mathematically unsustainable. The edge is not frequency. It's selectivity. Patience is often misunderstood as passivity. It's not. The disciplined trader isn't doing nothing. They're studying context, mapping levels, watching how price behaves at key areas, preparing for scenarios. It's controlled stillness. Think of a hunter observing for hours before taking a single shot. The preparation is constant. The execution is rare. When you reduce unnecessary trades, something powerful happens. Your win rate improves because you filter noise. Your drawdowns shrink because you avoid low-quality setups. Your mental clarity increases because you're not emotionally drained by constant action. 2 traders can start with the same capital and skill. One trades daily, chasing movement. The other trades only when conditions align. Over time, the selective trader usually ends up ahead, not because they're smarter, but because they protected their capital and focus. Modern platforms are engineered for stimulation, real-time charts, alerts, one-click execution. Everything pushes you toward activity, and activity feels productive. But in trading, productivity means following your rules, not placing trades. Some of your most profitable days will have 0 executions. That isn't laziness, that's discipline. Markets spend a large percentage of time consolidating. Chop, false breakouts, indecision. The big directional moves that create meaningful returns are less frequent. Impatient traders burn capital during the chop. Patient traders preserve energy for expansion. They accept that missing the first portion of a move is fine. Confirmation is worth the wait. Culturally, we associate action with progress. Trading breaks that pattern. Sometimes the most profitable decision is to step away and do nothing. You don't need to prove you're working. You need to protect your edge. Measure success differently. Did you follow your criteria? Did you avoid low-probability trades? Did you respect risk? Those metrics build consistency far more than a lucky green day. There's a difference between patience and hesitation. If your setup appears and you freeze out of fear, that isn't discipline. True patience is structured. You know exactly what you're waiting for. Another trap is perfectionism. Perfect trades don't exist. You're waiting for high probability, not certainty. Every so often, the market offers a clean, obvious setup, clear level, clear momentum, clear invalidation. Those are the trades that matter. If you've been firing at random opportunities all week, you'll miss them, either mentally exhausted or stuck in drawdown. Patience keeps you ready. Patience is built deliberately. Reduce your trade frequency. Add cool-down periods after losses. Extend holding time slightly. Create constraints that force discipline until it becomes natural. Over time, waiting stops feeling uncomfortable and starts feeling powerful. Professionals think in terms of years, not days. One trade doesn't matter. 1 week doesn't matter. Process matters. They understand that protecting capital is a form of earning, Avoiding a bad trade is money saved. In a world dominated by speed and automation, individual traders feel disadvantaged. But there's one edge you fully control: your behavior. Algorithms can process faster, institutions can deploy more capital, but they cannot control your impulses for you. Your ability to wait, your ability to remain neutral, your ability to do nothing when nothing is there. That's your edge. The market will always provide opportunity. The question is whether you'll have the patience and the capital to be ready when it does. Now let's go deeper, because patience in trading is not just about fewer trades. It's about emotional control under pressure. The hardest moments to stay patient are not when the market is quiet. It's when it's moving fast without you, when price explodes in one direction and you're flat, when Twitter is celebrating, when Discord is lighting up, when everyone else caught the move. That's when discipline gets tested. The fear of missing out is one of the most expensive emotions in trading. It convinces you that opportunity is scarce. It whispers that if you don't jump in now, you'll be left behind. But markets have been moving for decades before you arrived, and they will continue moving long after you're gone. Opportunity is not rare. Impulse control is. Chasing late entries destroys reward to risk. You enter extended. Your stop has to widen, your edge disappears, and suddenly what looked like momentum becomes exhaustion. Professional traders understand that missing a move is neutral. Chasing a move is negative expectancy. There will always be another setup. There will not always be another funded account. Another hidden enemy of patience is the need to feel productive, especially for driven people. High performers struggle with stillness because it feels like inactivity. But in trading, restraint is a form of work. Observing is work. Planning is work. Waiting is work. The best traders treat waiting like training. They build routines around it. They journal during slow periods. They review past trades. They refine criteria. They step away when nothing aligns. They protect their energy like it's capital, because it is. Emotional capital is real. Every impulsive trade drains confidence. Every revenge trade adds internal pressure. Every deviation from rules chips away at trust in yourself. And once self-trust erodes, even good setups become stressful. Patience preserves not just money, but identity. You want to become the type of trader who doesn't need constant action to feel competent. Here's another uncomfortable truth. Most traders don't fail because of bad strategy. They fail because they cannot sit still long enough to let probability work. A strategy with edge only works if you allow it to. If you override it every time you're bored, frustrated, or anxious, you're not trading the system. You're trading your emotions, and emotions are inconsistent. Consistency comes from repetition of high-quality decisions, not frequent decisions, high-quality decisions. Think about elite athletes. They don't swing at every pitch. They don't shoot every time they touch the ball. They wait for the right angle, the right timing, the right opening. The restraint is what creates efficiency. Trading is no different. There's also a financial compounding effect that most traders underestimate. When you reduce trade frequency, your variance tightens. Your equity curve smooths out. Your recovery from drawdowns becomes faster because you're not digging deeper holes. A 10% drawdown requires roughly 11% to recover. A 30% drawdown requires over 42%. The math punishes aggression. Patience reduces the depth of the hole you ever have to climb out of. Another key element is environment selection. Not every market condition deserves your capital. Trending environments reward breakout strategies. Ranging environments reward mean reversion. High volatility favors wider stops. Low volatility compresses opportunity. The patient trader adapts. The impatient trader forces the same behavior in every condition. Forcing trades in the wrong environment is like planting seeds in winter and getting angry that nothing grows. Let's talk about boredom. Boredom is often misinterpreted as a signal to act. In reality, boredom is just the absence of stimulation. If you cannot tolerate boredom, the market will exploit that weakness. Because most of the time, markets are boring. Professional patience is the ability to remain calm during boredom and remain calm during excitement. Emotional neutrality is power. And here's something that might shift your perspective. Every time you choose not to take a low-quality setup, you're strengthening neural pathways of discipline. You're reinforcing identity. You're telling your brain, I don't react, I decide. That compounds over time, and you become harder to shake, harder to manipulate, harder to bait. Market makers thrive on emotional traders. Stop runs exist because people panic. Fake breakouts exist because people chase. Liquidity exists because people act without confirmation. When you develop patience, you remove yourself from the majority behavior pool, and trading is often about being in the minority. Now let's get practical. If you want to build next-level patience, create entry checklists that are non-negotiable. Before every trade, ask, is structure clear? Is risk defined? Is reward at least 2 times risk? Is this during my optimal session window? If one answer is no, the trade is no. Binary decisions eliminate gray areas. You can also implement maximum daily trade limits. Cap yourself at 2 or 3 trades. When you know you only have limited bullets, you aim more carefully. Scarcity increases selectivity. Another powerful tool is delayed execution. When you feel the urge to enter impulsively, wait 2 full candles. If the setup is real, it will still be valid. If it disappears, it was noise. Time filters emotion. Over months and years, something subtle happens. You start to enjoy waiting. You feel confident being flat. You don't need constant market exposure to feel engaged. You know that capital untouched is capital preserved. And preserved capital is opportunity stored. Eventually, patience becomes your identity. You're no longer the trader reacting to every tick. You're the trader observing, calculating, striking with intention. In a world where everyone wants speed, your advantage becomes stillness. In a world where everyone wants action, your advantage becomes selectivity. In a world where everyone wants instant results, your advantage becomes longevity. The market rewards those who survive long enough to compound, and survival requires restraint. So remember this, the market does not pay you for effort. It does not pay you for screen time. It does not pay you for how badly you want it. It pays you for precision. It pays you for discipline. It pays you for patience. And if you can master the ability to do nothing when nothing is there, you'll discover something powerful. The quiet days are not empty. They're preparation. The waiting is not weakness. It's control. And control is the real edge. The market will always provide opportunity. Your job is not to chase it. Your job is to be ready when it truly arrives.